Okay, so we have had till now we have had two accountancy classes, and in that I have already started the introduction. So we have already discussed these things. Just have a look. Yeah, we have discussed introduction to accounting. We have discussed definitions of accounting. We have discussed what is the meaning of accounting. We have also discussed accounting process and some attributes of accounting we have discussed. So today we will be covering branches of accounting and what is bookkeeping, difference between what is bookkeeping, accounting and accountancy, and what is the difference between bookkeeping and accounting. So these three today I will be covering. Okay, so these three today I'll be covering. I'll just give a brief revision of the other three. So we have already done what is the definition of accounting. So if you remember, accounting is an art of recording, classifying, and summarizing in a significant manner and in the terms of money. Okay. Transactions and events which are in part at least of financial in character and interpreting the results thereof. So this definition we have done.
Yes,
And
ma'am.
yeah, then we have also seen, so we have also discussed in detail what is the process like. Process is collecting, recording, collecting, classifying, summarizing, and communicating. To whom? It gets distributed, communicated to whom? Users. Remember, I talked about users. So, who are the users? Internal users and external users. Yes. Then, yeah, these are the attributes or the characteristics. I have discussed it already with you all. These are the attributes. So, first is you have to identify your whether the transaction is financial in nature or not. Because if the transaction will become financial in nature only when it is an economic event. A non-economic event will not lead to a financial transaction, but an economic event will lead to financial transaction. For example, purchasing of chair is an economic event. The businessman has purchased the chair and it has got from the business. So it will be recorded. But going to the shop, the businessman just goes to the shop and just he verbally tells the shopkeeper that I am interested in buying the chair. So is this an economic event? No, this is not an economic event because the event has not occurred. It is just a verbal, what to say, communication between the shopkeeper and the business owner that he's just interested to buy the chair. But there is no transaction happen. Whenever there is a transaction happen, there are two things. There is a flow of money and there is a flow of goods or services in exchange. For example, when the chair is purchased, then the businessman pays cash to the shopkeeper and then the shopkeeper gives the chairs. So there is an equal and opposite transaction. Then you have to measure the identified transaction. So any transaction has to be measured. Are you purchasing the chair? Whether the worth of the chair is in rupee, dollar, yen, pound, what? Because we know that business is not just restricted to domestic market, it expands to the international market. Clear? Then we have to record it after we have identified and we have measured it in the monetary terms and in rupee terms as when India is concerned. We have to further record it, classify it, summarize it, analyze and interpret it, and then communicate it. Communicate to who? The internal and external users of accounting. Okay. Then this is what the accounting process looked like in your book. I have just made just little bit elaborated here. So the first thing is what is the first thing? The first thing is financial transaction or event has to take place. Then it has to be recorded. Now, from 2 days you are listening to this word recorded, recorded, recorded. Where it is getting recorded? Where it is getting recorded? It is getting recorded in the books of accounting. Books of accounts, not just some white sheet and paper where you're just writing it or some A4 sheet you have taken out from printer and then you're recording it. No, it happens in a systematic manner and there are books and there are various things. So the first recording happens in journal. Don't worry, we will be going deep into all these things. What is a journal? What is a cash book? But here I'm just naming all these things. So the recording happens here in journal. It also then you have cash book, purchase book, sales book, purchase returns book, sales returns book, bills payable book, bills receivable book, journal proper. So once it is journalized, so the first recording happens in journal. And this journal is also called books of original entry. Later we'll be studying in detail in following chapters. So this is also called books of original entry. And after it has been journalized, so we call it in journal, what are we doing? We are journalizing. Okay, like how we have our personal diaries, so we call it as a journal. So right, journal, when we say journal your feelings, it's like you're recording all your feelings, how you felt about the day or whatever. So similarly in accounts, first you identified that a financial transaction and event has happened. Then you straight away go and start journalizing it. And these are some books, main books and sub books of journal. Okay, for example, in all the cash transactions will be recorded in cash book. All the purchase related transactions will be recorded in purchase book. All the sales related transactions will happen in sales book, etc. I'm not going deep here. Then once it has been journalized, then it has to be classified. Okay, once it has been journalized, then it has to be classified. And that classification happens in some place called ledger. So after journal, we go on to prepare the ledger. And once we have prepared the ledger, then we summarize it in, so there will be so many ledger accounts. Okay, there will be so many ledger accounts. Now that ledger accounts have to be summarized somewhere. Like for example, first when you study a chapter, you make detailed notes. Okay, then from that detailed notes, then you take out some key points. So that's like ledger. Just an example, I'm trying to, because you have just entered standard 11th, I'm just breaking it down at your level. Then you take out some key points. And then after that, you further make some, further when you summarize the whole chapter in one place and try to write it in one page. I don't know if you have done it or not, but when you are studying with me, I will teach you how to do it. Then the whole chapter you will summarize in one point. So journal is like detail. You have recorded all the transactions in detail. Then in ledger, you record all the recorded transactions which are recorded in detail in a slight organized form in ledgers. Then from ledgers, all the ledger accounts are summarized in a place called trial balance. So this is the first place where you record. Then this is the second place when the recorded transactions are then classified into ledgers. And after in ledger, all the accounts have been maintained. This ledger further gets summarized in a sequential place, and that place is called trial balance. And this is a place where if there is any error, in maintaining the book, then the trial, this is the first place where you can do the accuracy check. And then after summarizing, then it goes to analysis and interpretation. And here there is something called balance sheet. We prepare balance sheet where all the trial balance, all the accounts are then classified as assets and liabilities, and then we tally it. And then it is ready for analysis and interpretation. And once analysis and interpretation is done, then it can be communicated to the users. Okay. So here I've just given you a bird's eye view. We will be elaborating on the whole process in the following chapter. Now this whole accounting process, like how in science subject, in standard 11th, science is one broader thing. Under science, there are three broad subjects like physics, chemistry, bio. So accounting is also like a science. Accounting is also an art of recording, and it's a science. So there are branches of accounting as well. So right now, when you are studying in 11th and 12th, you are studying only accountancy. But when you further go to graduation, you will be studying various branches of accounting. So today we will be talking about what are the branches of accounting. Okay, so accounting is one subject. It has various branches. So the first is financial accounting. Second is cost accounting. and third is management accounting. In BCom, generally you do financial accounting in first year. In cost accounting, you do in the second year, and management accounting, you do in the third year. So this is a specialization. So when I was in BCom, my sixth semester specialization was management accounting. Okay, so this like management accounting is a more specialized paper, whereas cost accounting is a little bit general paper also, and specialization both happens. Financial accounting is mostly a general paper for everyone. For understanding the books of account, for understanding the basic books of account, how it is maintained and how all the transactions are recorded, how the double entry things happen. First, you have to understand financial accounting, because if you do not have the understanding of financial accounting, you cannot understand cost accounting, you cannot understand management accounting. Okay. So now next first part, what is financial accounting? What first branch of accounting? Financial accounting. So what is financial accounting? Financial accounting is a branch of accounting which records. What does it records? Financial transactions and events, and summarizes and interprets them and communicates them to the results of users. So this is like same definition of accounting, only the same definition. So here they have used the word financial accounting is that branch of accounting which records financial transactions, economic transactions, and events. And after recording, what does it do? It summarizes, it interprets. So where does the recording happens? The recordings happens in journal and ledger. Then it summarizes. Where does the summary happens? The summary happens in trial balance. And then interprets them and communicates. So interpretation and communications happens through balance sheet and cash flow statement. These are some words which will be elaborated later on, but I'm just writing and telling you. The end product. Now, why are we doing financial accounting? Why is the whole financial accounting? Why the chartered accountants take so much of pain and prepare? The end product of financial accounting is the profit and loss account for the period ended and the balance sheet as on the last day of accounting period. So much of pain, that whole process I showed you, na? This whole process is only for knowing two things, or rather three things. First is the profit and loss statement, and second is the balance sheet, and third is not mentioned in the definition, but it is cash flow statement. Like how on the other day, where on the very first class when I asked you all, what is accounting? You told me that, ma'am, accounting is when, why do we do accounting? We do certain debit and credit, and the whole reason of accounting is to know the profit and loss. So when we are doing a business, our whole objective is to know whether we are going to make profit or whether we are going to make loss. So just by daily sales and purchase transactions, you can't make out whether you are headed to profit direction or whether you are headed to loss direction until unless you write it somewhere, then compare it with the data. Okay, I invested 1,000 rupees in the beginning, and now after 1 year, I'm having, let's say, rupees 10,000 rupees. Then it makes some sense that 1,000 grew into 10,000. Understood? But then is that 10,000 your real profit? Is that 10,000 your real revenue? There are many other such things which we don't know, and that financial accounting helps us to understand. And balance sheet helps. So through financial accounting, we make balance sheet, and balance sheet gives us many such answers. So what is the main objective of to do financial accounting? The end product of financial accounting is the profit and loss statement. Now, one thing I would like to tell you here, there's one thing, very big, important thing missing here. Financial accounting always deals with past events. And as I told you the other day, that when we do financial accounting, we we take note of our financial year. We record it for a financial year. And the financial year starts from 1st April of any year to 31st March of next year. So the current financial year is 1st April 2024 to 31st March 2025. And already we are 8 days inside the financial year. We are 8 days in the financial year. So now when we will, now for this year, financial accounting, so the accountants would have started working hard. So they would have recorded all the transactions for 8 days up till now. So when is now the next question is, when will be the profit and loss account prepared, or when is the balance sheet prepared? Is it prepared weekly? Is it prepared monthly? So the main reporting, yeah, there are half yearly reports, there are quarterly reports, but the main accounting books are published for 1 year. Okay, so this profit and loss statement and this balance sheet will be as on 31st March 2025. So all the accountants have started working hard for 2025. And it will record only the past events. Up till now, from 1st April till 8th April, whatever transactions would have taken place till now, it's all past. Yes, it's all past.
Yes.
So on 31st March 2025, whatever transactions or recordings the books will show, it will be all past events. So this is one main thing of financial accounting, because in management accounting, what we will now do, management accounting deals with all future events. Okay. So the data given by financial accounting, again, one thing which is coming here, the data which is given by financial accounting is always historical in nature. What is historical in nature? Something like you have studied history subject, right?
Yes,
What do you see in history subjects? All that events which have occurred, all the Harappan civilization, all the various the various wars which you would have read about, Mughal wars and all that wars, all have happened. It's just a history is all about what had happened in the past. So similarly, financial accounting is just like history. It gives historical data. It gives historical information. Then the next branch is cost accounting. Now, why this cost accounting came at the very first place? This branch just came because financial accounting had some limitations or disadvantages. And to improve upon these disadvantages, or to improvise upon financial accounting, a new branch of accounting itself came, which was cost accounting. Now, what is cost accounting? The limitation of financial accounting in respect of information related to the cost of the products or services led to the development of a specialized branch, that is cost accounting. Now, financial accounting was mostly talking about revenues, profits, losses, but it was not talking about cost. If suppose I'm a business, if I'm owning a business of a bakery, now just imagine if I'm a businessman and I have a bakery unit. Now, should I be just interested in selling cakes and cookies and earning the revenues? I should be also bothered about the cost of my raw material. Like if I'm a baker, if I'm having a baking unit, bakery shop, then also I'll be purchasing various raw materials like wheat, flour, refined oil, butter, sugar, to make cakes and cookies. So what about the costs which I have incurred? And that is why cost accounting is there. It's a special branch which talks about the cost of product. So if I'm selling a cake of worth 100 rupees, to earn the 100 rupees revenue, how much cost I have earned, how much cost I have incurred, then only Okay, now just tell me, if I tell you that I sold rupees 100 worth of a slice of cake, what will be my profit? You tell me. Is 100 rupees my profit? Selling price of cake per slice is, or rather call it as pastry than calling it as cake, is rupees 100. What's my profit? You won't be able to understand what's my profit until and unless I tell that the cost of that slice of cake to manufacture it, the cost came up to 70 rupees per slice. Then you can tell me what's the profit?
30%. 30.
30 or 30%, because here anyways it is given in. So when I have to find out my profit, I need two things. I need selling price and I need cost price. So understand it that way. So this cost, to determine this cost effectively, we have cost accounting. And financial accounting just records. It's not like financial accounting just records everything. It records even cost, it records revenue. But then cost is a very important aspect because costs have to be controlled. And that cost accounting helps. So what does cost accounting do? It ascertains the cost of products manufactured or services rendered and helps the management in decision making or say price fixation. So just now I gave you an example of a commodity. So commodity is able, you were able to visualize, okay, cake means it would have got manufactured. So there must be some raw material cost, there must be some labor cost because I have to also pay the bakers, I have to also pay the sales staff and service staff who are there, in the store. But what about services which are invisible? Like when you go to a beauty parlor, you get a haircut done or you get some services rendered. So what about the services? So for that services also cost accounting. What about some designing some softwares? Because it's all codings written. So the coders have to be paid money. So this the cost accounting tells. Cost accounting helps to understand the costing of a particular thing, be it goods as well as services. And why are we interested in this thing? Because it helps the management in decision making, price fixation. Now, for example, here, if I don't tell you that, if I don't give you this information that the cost price of the slice of the cake is 70 rupees, if I don't tell you the cost, will you be able to fix the price? No. So if I know that my cost of the cake is 70 rupees and I want minimum 10% profit on it, minimum 10% I should earn profit on it. So now as a management, I have to make decision that my cost is 70 and I need 10% profit on it. So if I do 10% of 70, so I'm going to get 7 rupees. So my selling price should be 70 plus 7, which is rupees 77. Are you getting it? So how did it help me? Now, as a management, I understood that if my costing is coming to 70 rupees, and if I want to earn a 10% profit to sustain myself, so every slice of cake or pastry which I sell, I have to sell it at 77 rupees so that I earn a rupee 7 rupee profit. Now, imagine, okay, because it was a launching phase, 1 year was launching phase, I was taking only 10% profit. But let's suppose my bakery unit has become very famous. My shop has become very famous. What if I want to charge it at 20% profit? Now, simply my profit will change from 7 rupees to 14 rupees. If I do 20% of 70, it will become 14 rupees. So then in that case, my selling price will increase from 77 to 84. And not only revenues, something can happen to the cost also. Maybe because my store became all the more efficient, my cost could have also gone down. From 70, maybe the cost would have gone down from 70 to 65. Then I'll be able to earn all the more higher profits. Okay, so all these things will be given by cost accounting, or cost accounting will help in ascertaining all such things, and it will help the management to do a better job. Then the next one is management accounting. Management accounting. Now, what is management accounting? Management accounting is the most recently developed branch of accounting. Okay, as I said, cost accounting. First, everyone has to understand financial accounting. And only if one has an understanding of financial accounting, then only you can understand cost accounting and management accounting. Because just imagine financial accounting is the mother, and cost accounting and management accounting are her kids. Everything comes from financial accounting. Management accounting gets its data both from cost accounting and financial accounting. Cost accounting gets its data both from financial accounting and its sibling management accounting. Okay. So management accounting is the most recently developed branch of accounting because, as I told, as you see the accounting process, it's not just recording, classifying, and summarizing. Recording, classifying, and summarizing only financial accounting does. Then we have interpreting and communication. Interpretation part is done by both cost accounting and management accounting. And management accounting does all the more interpretation. Management accounting is a science which is just developed to break down the data of financial accounting and cost accounting for managers. The name itself is management accounting. It's mostly meant for the internal users, for the managers to understand the data of the business, how to understand the past data, and how to predict the future. So as I told you, financial accounting deals with past data, management accounting deals with future data. How much should be the profit percentage next year? So all the things related to future is being dealt by management accounting. So it is concerned with generating accounting information relating to funds, how much funds, what is the cash flow, whether the business is having more outflow of cash or more inflow of cash, outflow, costs, profits, etc., as it enables the management in decision making. So this is the most important thing. The whole job of management accounting is to assist the management in decision making. Like how in financial accounting, its main job was to give the, to ascertain the profit and loss and balance sheet of accounting period. The main job of management accounting is to enable the management in decision making by passing on the information. Thus, we may say that management accounting addresses the needs of a single group of single user group, that is the management. So management accounting helps only the managers to generate data for internal decision making, related to business. But financial accounting generates data for both for internal users as well as external users. Okay. So I hope you have understood this thing. I hope you have understood all the three branches of accounting.